Joining us live with what we should expect at today's opening bell is financial analyst and CPA Dan Geltrude. Thank you so much for joining us.
Thank you, Heather.
So let's bring up the stock market. What happened yesterday? The up and down. I mean, it really plummeted. What is going to happen today?
Well, I anticipate that the sell-off may very well continue at the opening bell.
So even lower?
It is possible. Okay. I think that the market is going to need a little bit of time to stabilize and absorb the realization that we could be going into a global recession. And it's going to be difficult, although not impossible, for the United States to be able to not get dragged into that. I think the fundamentals of our economy are strong enough. Yesterday, Janet Yellen talked about that she felt that the United States was strong enough not to fall into a recession. I believe that's true.
So what's causing the global recession?
Well, the news that came out yesterday specifically related to Germany having a shrinking economy, as well as China. Now, China is experiencing the hurt of a trade war. There's no question about it. And for them to say that they're in a bit of a slowdown with the numbers coming out of China, how much can you trust those numbers?
Right.
But that's really an indication that the global economy is slowing.
Yeah. What about this that we heard about yesterday, the inverted yield curve?
Yeah, what's happening there is it's basically the equivalent of going to a bank and getting a 5-year CD, and the interest rate is less than a 2-year CD. It really doesn't make any sense. So it's the same thing with the Treasury. Why would a 10-year Treasury pay less interest than a 2-year Treasury? It's inverted, and that traditionally has been a sign of a recession for the last 50 years for the United States.
Traditionally, but that might be the key word here, because we have a very non-traditional president in the White House right now, and he's very positive. He thinks that our economy, I mean, he knows our economy is great right now. The numbers prove it, but the 2020 Democratic wannabes, they're counting on this recession. They're counting on the economy taking a turn.
When you have an incumbent president with a strong economy, very, very difficult to be beaten. So I think from the Democratic standpoint, for President Trump to be vulnerable, not to be reelected, the economy is going to have to weaken. Now, I think it's very unpatriotic to be rooting for a bad economy, but you know, the mainstream media is somewhat pushing that storyline.
It's unreal. It's like if they mention it enough, they'll create it.
Well, that's the point, right? To strengthen the Democratic ticket, whoever may be on it,
I mean,
against
that's
Donald Trump.
Very sad to wish for an economy and to wish for, to wish for a recession and for the economy to start doing worse than it is. It's unbelievable.
Well, I don't think that we're going down that path. And if the indicators are accurate, Heather, we're still anywhere from 12 to 24 months, and a lot could happen in that period of time.
I believe you. I believe you, Dan. Thank you so much.
Thank you.
Great to have you with us.